Hello, and welcome to this tutorial. Today, we'll walk you through how to add a new account in two key tabs, the Opening Balances tab and the Chart of Accounts tab. This process ensures your accounting file starts with accurate figures and reflects your company's financial position at the beginning of the fiscal year. Step 1. Understanding the purpose of the Opening Balances tab. The Opening Balances tab is used to record your company's opening balance sheet figures, meaning it only includes balance sheet accounts such as assets, liabilities, and equity. If your business has already filed a tax return, entering these balances is mandatory to keep your accounting up to date. Since your company's previous chart of accounts may differ from the one in this file, we'll show you how to add any missing accounts so your entries match your prior year's financials exactly. Step 2. Adding a new account to the Opening Balances tab. Let's walk through the process using a real example. We'll add a long-term asset account for a building. Go to the Opening Balances tab. Scroll to the Assets section and insert a new row below the existing assets. Enter the account number, starting with 1, as all asset accounts do. Type the account name, building. In column C, enter the opening balance amount, $100,000. Then, drag and drop the formula from the row above into column E to ensure the total calculations include this new account. For testing purposes, and to respect the rule that assets must equal liabilities and equity, we'll also add $100,000 to retained earnings. Remember, assets should be entered as debits, while liabilities and equity are entered as credits. Step 3. Add the account to the Chart of Accounts. With the building account now entered in the Opening Balances tab, let's move on to adding it to the Chart of Accounts to ensure it's fully integrated into your financial setup. Open the Chart of Accounts tab. Locate the Long-Term Assets section. Refer to column C to confirm the account category. Insert the new building account just below the existing long-term assets. To link it correctly, type equals in the cell, navigate to the Opening Balances tab, click on the building account name, and press Enter. This ensures the name is pulled directly from the source, avoiding any typos or mismatches. Enter the account number, name, and complete columns C to F as needed, following the format used for other accounts. This step ensures the account is recognized across all tabs and reports. Step 4. Link the account to the balance sheet. Let's now make sure the new account appears on the balance sheet. Go to the Balance Sheet tab. Find the Long-Term Assets section and insert a new row below the existing fixed assets. In the appropriate cell, type equals, then go back to the Opening Balances tab and select the exact name of the new account. Drag and drop the formula from the row above to apply the same logic. Unhide columns J, K, and L and copy the formulas from the row above into these columns. Once done, hide columns J to L again to keep the sheet clean. Check that the new account is included in the total long-term assets calculation. If it isn't, update the formula in the total cell to include the new row. If needed, pause and rewind the video to follow each step carefully. Make sure all formulas are correctly added so your calculations run smoothly. Step 5. Testing the setup. Let's test everything to make sure it works correctly. Let's check the Balance Sheet tab to confirm that the $100,000 entered in the Opening Balances tab for the building account is showing up properly under long-term assets. Check the Balance Validator at the bottom. It should display $0 in green, confirming everything is balanced. Now that the formula in the Opening Balances tab is working correctly, let's move on and test how transactions are reflected in the file. Go to the Transactions tab. Add a test transaction dated January 1st, 2025. Use the long-term loans and the new building account. Record an expense of $200,000. Refresh the pivot table in the Trial Balance tab. Return to the Balance Sheet tab and confirm that the transaction is reflected. You should now see $300,000 under the building account, $100,000 from the opening balance, $200,000 from the transaction. You should also see the long-term loan of $200,000 in the long-term liabilities. Always check the Balance Validator at the bottom. It should display $0 in green, confirming everything is balanced. If everything adds up, your account and formulas are properly set up, and you're ready to move forward with your opening balances and future transactions. If you also need to add a profit and loss account, here's a quick example using other expenses. Start by going to the Chart of Accounts tab and adding a new row. Enter the account name. We'll use other expenses for this example and fill out all the required columns, just as you did for the balance sheet account. Next, head to the P&L tab, insert a new row, and add the Other Expenses account. Then, drag and drop the formula in column F to include it in the operating expenses total. Make sure the operating expenses total now reflects your new account. To confirm everything is working properly, run a quick test. Go to the Transactions tab. Add a transaction of $100 using the short-term loans and the Other Expenses account. Refresh the pivot table in the Trial Balance tab. Return to the P&L tab to verify that the transaction appears correctly. And finally, check the Balance Sheet tab to ensure the balance check still shows $0 in green. Now that everything is set up, go ahead and delete the test entries, refresh the trial balance, and begin entering your actual data, starting with the Opening Balances tab, followed by the Transactions tab. The good news is, once you've completed this setup, you won't have to start from scratch next year. This file becomes your trusted template, helping you save time, stay organized, and keep your financial data consistent year after year. In this tutorial, you've learned how to add a new account to the Opening Balances tab, Chart of Accounts, Balance Sheet, and Profit and Loss. How to source accurate figures from your prior year's financials or tax return. How to update formulas to keep your totals accurate. This setup ensures your accounting file starts on solid ground, with clean and reliable data from day one. Thanks for watching, and don't forget to check out our other tutorials for more tips on managing your financial statements with confidence. If this walkthrough helped clarify things, feel free to subscribe, drop a comment, or share it with fellow entrepreneurs who could use a hand with their tax filings. Thanks for watching, and I'll see you in the next chapter of your business journey.